Hi, this is Randy Finney with the Right Side of the Chart, and this is a late session update for Monday, August 25th, 2025. It's 2:01 p.m. Eastern Times. I'm starting this video, so we have about 2 hours left in the trading day. And here's what I'm going to do in this one. We'll keep it relatively brief. I figured what I'll do is update trade ideas, and I'm just going to go through the in no particular order. Or no, I'm sorry, in a very particular order. The official trade ideas. What I mean by that, about I don't know, 70 plus percent or more of the trade ideas on the site I cover in videos. It's just much more efficient when I find a sector or some kind of niche, some kind of some stocks with a common trait, or what I'll do many times is just kind of put together on my scratch pad things that stand out to me, and then I'll cover those in a video, and that way I can cover a dozen or more trade ideas easily. Now, the official trade ideas are the ones I tend to have the most confidence on. Get those to you out in the front page posts with marked targets, often trying to include suggested stop or multiple stops if there's multiple targets or depending on the entry point. So I'll get to the trade ideas here, and we'll roll in. Starting with this one, because this was the last one I gave you on Friday. I cover QQQ nearly every single day that I do this one, Monday through Friday when I give analysis. I'll cover the broad markets, often covering QQQ and or the S&P 500 via SPY, the futures, and often the small caps. Those are my primary indexes. Every now and then I'll cover the mid caps. They're important, but kind of covering the large QQQ and SPY are your large caps. And so, you kind of can fill that void in between the large and mid caps. The charts are usually going to be somewhat of a hybrid of the two. So most recently, we had a new short trade on objective short entry, I should say. We did have multiple sell signals, as I mentioned. I was out of town the week before last, and we had the breakdowns of that uptrend line right there, aka bearish rising wedge. And then we took out the previous highs, so this whole thing right here. And guys, I'm just kind of recapping. That breakout to new highs was a failed breakout in QQQ, as anticipated it would be if and when QQQ took out the previous high. So we have that, so that's a check mark. And then, as I highlighted to you on Friday and again today, we're right back exactly to that downtrend line. That's where I gave you the short on Friday. I gave you a suggested stop on a daily close above 580. Why that level? It should be just out enough that if they pop this, if they want to have a stop raid, come in and blow out the stops, and they happen to clip it intraday, normally, from my experience, if my analysis is right and we're going to go down to these deeper targets, then you probably close back below there after blowing the stops out intraday. Now, I don't even think that's going to be hit. If I had a high degree of confidence, that's where we'd be shorting. That's all it is, guys. A suggested stop. I can almost guarantee that the majority of people listening to my voice aren't shorting right now or don't have an interest in shorting. And if I'm right on that, then that's good. Then that gives me more confidence in this. If everyone else is shorting, and I say that not to poke at you guys. I'm saying as a contrary indicator. The masses, when the masses give up shorting and all they want to do is buy because they think the market's only going to go up, that's usually when you've had that shift where bullish sentiment has reached an extreme, and that's what tops. Whether they're temporary swing tradable tops or an ultimate top in a bull market, there's two differences, and that's they can and often are the same thing, but not always. So there's near-term buying climaxes and sentiment extremes, and then larger ones as well. All right, let's not harp on it too much. It's a take it or leave it thing. That's your next resistance, minor resistance at 575.63. And then above that, there's just not a whole lot more. There's another minor resistance level just below that stop that I gave you. It's right about here, about 578.61. Hence the reason for my 580 stop. And most importantly, and if you're listening to me now, hear this, and then you might want to watch the rest of the video. Most importantly, and I've been saying this more and more recently, QQQ is a single position, a single trade. Take it, leave it. If you like it, go the other way. I've talked about that. We've got one person that says buy every dip and we're going to go up, and a couple, I'm sure others think that's the case. And so the takeaway is I give you support levels and resistance levels. I tell you what I think is going to happen at those levels. But what happens if wrong, the other thing happens. So in other words, I think we're going to get rejected here. We already did once, and we're going to go down. However, if we break that out, that's bullish. And then if we break out the next resistance and so forth and so on. So those bullish right now can be looking at this same level instead of shorting at that downtrend line, wait for a breakout. And if you want to increase the odds, maybe take a partial position on the breakout and then add on a breakout above 570, 563. And then you can add, once we take out 580 or so, especially on a closing basis, new highs are pretty much baked in the cake or close there, and you can trade that way. Or maybe you're longer term bullish, but you think we need a little more pulling back before then any or all of these price targets that I have that are support levels are objective levels where you can go long. You know my thoughts. I added this little tidbit here, and I covered this before. T2 is a very significant support level, I believe, about 550.88, that if taken out, it's going to sharply increase the odds that T3, 4, and 5 will be hit. Another way to spin that is all other things being equal. In other words, in a vacuum, folks, I can't guarantee we're going to hit it. I think we're going to hit T2. Right now, it's my preferred near-term target. And each of these are levels I expect a reaction if and when hit. Now, if we get down to T2, depending on how the charts look, whether NVIDIA is about to report, if it's going to be Wednesday, that's probably going to be it. I think we'll see some profit taken on NVIDIA and the likes, and we'll probably come on down to that level by Wednesday, and then, upon the initial tag, most likely bounce. However, who knows? Let's say we park there. Let's say we park on or just above T2 Wednesday at the close, and NVIDIA is reporting after the close. We could then gap down well below it, or we can gap up. I'm going to get to NVIDIA in 1 second. So that's it, guys. It's simple stuff. Take it, leave it. But what we're going to do in this video is we're going to do this. We're going to go through all of the recent official trades. Here's the home page. We'll go through in order, and then hopefully, I talk about it every day, but I want to make sure you guys understand where I come from at just about any point in time. Raging solid sell signal bear market. There are points where I may have very little long exposure in equities, but at any point in time, you go back on this site, just about any point in time, I'm going to have long trade ideas out there, both personally and on the site. I can't possibly take everything I share. I cover, sometimes dozens, if not sometimes I'll go through 100 charts a week on this site, but I take the majority of these, and which ones I like. I tell you which ones I tend to like better, which ones I don't have a strong opinion on. And a lot of these are trade setups, are untriggered, waiting for a buy signal. So let's go through. There's QQQ. Before I move away from it, remember, these are near-term targets. If T2 gets hit, and I got to do this, I like to do this in advance. Markets are going to kind of grind around somewhat, most likely between now and Wednesday's close before NVIDIA reports. And there's other things on the economic calendar this week that could move the markets as well. After that, we'll probably have, my guess is Thursday and into Friday, we'll have a good idea if this market's going to take out the previous highs and rally from there, or if it's going to move much lower. If it does take out T2, remember that, as I said, we'll increase the odds that T5 is going to be hit. That's down to 526. This is a 60-minute chart. This is my favorite swing trading time frame for trades with a typical swing trade holding period, which I define as measured in typically weeks, sometimes months, can be days. Every chart pattern, every trade is different. Some have explosive nature and they hit their targets right away the same day, next day. Others can take a little longer to play out. But I'd say, average, let's say 3 weeks to 3 months is a good swing trading time frame, right? For typical swing trades. But if that happens, it's going to take us down to 526 on T5. Then I turn my focus to the longer term, i.e. the weekly charts and the daily charts as well. And so if it does that, it has the potential to have this whole breakout over that previous high from early 2025 can take us down all the way close to maybe even below these 200-day moving averages right there. Right now they come in about 523, and if they get taken out, that's going to, as I've said before, increase the odds that my additional targets, these are still very much long-term targets that I've maintained, have in play. They come back. Yeah, we've been talking about these targets since I laid them out in 2024. We hit the first three of them, and as we often do, we had reactions off. T2, we had a good bounce, took us to a marginal new high. We hit T3, another good bounce, marginal new high. And so this is still my long-term outlook and expectation. Nothing has changed. The only things that have changed, I'm seeing finally more and more building evidence of the job market, which is the last pillar of typically any secular or bull or expansion, economic expansion. I'm seeing that start to go. All right, so let's move on. One trade, remember, I talk about it a lot because it is the stock market. We're going to go to the rest right now, and some of these are also actionable. I'll get to this in a second. Somebody asked me about Wayfair. Let me just add that to the end of my list here. And yeah, I think it's an actionable trade. All right, so we go back to home. All right, and next one up is wheat. Yeah, I just gave you an update today. I'm not going to spend a lot of time on it. There's the chart. Still looks good, as do corn and soybeans. I've covered corn and soybeans, I think, as recently as last week. They're the other grains, so the three tend to move together. And a lot of times, yeah, just like I like to go long silver after I've been bullish on gold and GDX, but I've seen silver lagging, and gold is still bullish, then I like to close that gap. Silver almost always plays a game of catch up in those scenarios. Same thing on the downside. If gold rolls over and starts correcting, and I can make a case to short gold GDX, I'll usually go there first, and then silver, if it's been the last holdout, will fall, and you get more bang for your buck. And the same thing with these commodities. Sometimes corn and soybeans will rally, wheat or any of the three will lag, and then you can usually make a nice catch-up trade, I call it, on the rest. So I gave you an update. I don't think there's a lot to add. We need to take out that R1 resistance level. As I often say, very often, resistance is resistance until unless taken out. So when I give it to you today, the last thing in the world it was an actionable at that moment trade because we were there. Although wheat had broken out futures, but as I said in that, be better to see this taken out. So wheat futures took out their trend line, and probably back testing it right now. This is just WAT. I had it queued up, and so that is your next objective entry buy signal on that break of the R1, meaning first resistance, second resistance, still the first target, etc. All right, let's move on. Next trade. So far we've seen one short, one long. This is a trade setup. Trade setup is just that. As the name implies, you have, I'll go to the UNG chart. Somebody asked me for an updated one, which I did post. You can go into under one of today's posts. I think it was the one I made before this. I didn't cover it because it hadn't broken out yet. I posted that as a setup to you last week. We were right here, I think. And again, there's a huge difference between a trade setup and an actionable trade. A trade setup, you don't own, you don't buy, you don't have a position in. It's just something that may happen. And if it doesn't happen, it's the catalyst, the breakout, then it's not an actionable trade. So this is still a trade setup. I very, very much like it. I also covered, I didn't queue it up here, but I had it the long-term uptrend. I covered this just last week, so you guys can just go back under this post. If you click on the symbol tags, there's every post that I do, every stock symbol or commodity, every ticker that I cover is tagged under there, and you can click on that, and then it'll queue up all posts on that particular symbol or security in order, right? So then you can just click on UNG/NG for futures or $NatGas, and that'll queue up the previous charts. And that's that. But somebody asked for an updated chart, and there it is. So you still have the same thing. I just added these two minor resistance levels. So that is also a long trade. So we have one short, two longs. Again, this has nothing to do with the stock market. It's just uncorrelated. It can go up when the stock market's going up. It can go down. All right, so that's that one. Again, there's a lot of individual stocks here, but these are the official ones. ACN. So he hit first price target last week. Let's just dive in the charts. It'll be faster than clicking through there, and you can pull those posts. This is where I I believe that I add value that a lot of services just can't, and that is micromanaging trades, being very, very precise with price targets. When you turn on Bloomberg or CNN, you're hearing these analysts that are tend to be, of course, permanently bullish. It's just the nature of Wall Street, for that background. And they're going to give you a target with no time frame, or maybe a rough time frame, and a kind of a target that's far from precise, and they often modify those. These are, again, that's, if you're investing and they're accurate, which usually they're not, you can certainly position your money. If you have an analyst you follow. I don't follow anyone else. I just kind of live my own bubble. There's certain, things I'll read, but as far as, people making calls. And so this is what you can use these targets for, is booking profits if you're an active trader. And again, it's very, very important. There are times, and I'll state my opinions or thoughts if I have them and they're strong, where we may blast through the first target or any target. But with that being said, usually upon the initial tag of each target, remember, we're long here, somewhere off the lows, sold there, and you had a nice pullback, and it's not much. And ACN, you can see it's pulled back to the uptrend line. So it's been about a 2-3% pullback, and it's still a constructive chart. We're coming off the lows, and as I've been, if you're new to the site, I've been mentioning this for the last couple months now. The majority of individual stocks that I've been sharing and taking personally, and sharing as trade ideas on this site, tend to be quality names, blue chip type stocks. This is Accenture. We've done Pepsi, Novo Nordisk, even though it's not a U.S. company, it is a global leader in diabetes, and the maker of Ozempic and Wegovy, the drugs that literally changed the world, biggest blockbuster drugs since, since friggin' penicillin. It's just crazy. But those are the type of names we've been buying, and batting maybe not 1,000, but damn near it, and blowing the market away. When you look at, that's the takeaway, guys. If we go through these, and I'm giving updates on them and also highlighting, again, I can't remember the exact entry point. I know we bought off long-term supports, 7-8%, and nice pullback. If it takes out this trend line, you're probably going to correct more. That could send it down for another new low. I do believe, and I'm going to say it now, this is like a game of musical chairs, whether you're trading meme stocks, tech stocks, AI, even some of these bottoming plays. These are companies that they're in their own bear markets. A lot of these names, I'm trading these bear market rallies. I'm doing it based first and foremost off the constructive charts, and that's why we're in there. So that's it. Take it, leave it. But the takeaway is note the entry points and the exit points and precision. And then again, this one, I flip a coin and see it taking out that level. I don't have strong convictions. All I can tell you is if it takes out T1, where we already had a reaction, I had my first target right there. We had a high of that day of 262.17 versus 262.34. Again, always sell a little under the actual resistance level. That's what I list. I always recommend to do that and do it myself personally, because sellers will tend to step in early. And so 15 or 17 cents on a 260 point security is a tiny fraction of 1%. So that's a perfect fit right there, for all intents and purposes. All right, next up we have Novo Nordisk, which I just mentioned. I told you we've hit 2 targets on the daily, three targets on the daily. On Friday, I think it was, yes, I told you that we hit my first long-term target. I gave you targets on the weekly as well as the daily. This is for the less active swing trader, i.e. trend trader. I still have the second target. Wouldn't be surprised ultimately, especially if the stock market holds up. I'm open to any and all possibilities. And in fact, to call a bear market in the stock market is a very low probability event because most of the time, 80+%, whatever it is, stocks go up. However, the technicals are there. Now, so what I'm getting on that is I very, very well may extend this. This is a very constructive weekly chart. I told you I love this one recently at long-term support, 47.43 plus a super duper well-defined uptrend line. It doesn't get any better than that. But as I said, Friday, likely pull back, have a reaction, a tradable reaction off there, and that's what we have. We're down 1%. So again, if you exited on Friday, you've already saved yourself or turned around and maybe active trader shorted it and made 1%. Now, as I told you on Friday, it's uptrend line. If that goes, which I think it will, I think we're going to get a little deeper pullback. That can take us down to any of all of our previous targets, which are support. It'd be really nice to see it come back to T1 or T2. Those are objective entries, especially if the market's holding up. If the market craps out, maybe we go back and test that long-term trend line again. All I can tell you right now, that's pretty significant resistance, and so far so good. So again, that's the takeaway, is that T1, there's no reason to really cover that. Was a quick pop. T2, T3. This is the one to sell. I mean, to close profits and then recycle back in on a pullback. That's, again, my preference. And I did that about, I think it's about 80%. I have positions across multiple accounts on this one. So longer term trade for me as well. All right, next up, go back to the charts. Novo, QQQ, that was when I laid it out on Friday, I think it was. Natural gas, I laid out last week as well. Financial Toast, TOST. All right, so although most of the individual stock trades, equity trades have been longs for the past couple months here, we've had a couple shorts and they're playing out nice. This one was a short. We had a beautiful bearish rising wedge pattern right there. That's your bearish rising wedge. This is your bigger divergence again. So you have both the divergence on the wedge itself, longer term divergence. We hit T1. So here's a great example. Again, guys, I don't remember. You can pull that up on the post. I don't remember exactly where we shorted. I think I waited for the breakdown. Sometimes I'll short them pre-breakdown. So whatever we hit it for, I can tell you right now, what did we hit? First price target hit. What was our profit? 7, 8%, 6%. All right, so we hit it for a quick 6% profit. Very, very good support. Again, I'm trying to speak to the benefits of swing trading here. Very good support right there. And we bounced. So you could have covered, turned around, went long, made 6%. Now you're up 12% net. You hit the 50-day moving average, which is and was and still is. We hit it again today. We hit it Friday and again today. A nice resistance level. Bullish when the stock's above it, bearish when below it. See when we took it back here? The yellow line, that is, the 50-day. You can see how well, once we took it back, we danced on it. It was resistance, resistance, resistance below it. So that is objective, as would be if it pushes a little higher to 45.19. At that point, I would stop shorting it. I would sit tight. I'm going to leave that the initial stop there because we've only hit T1. But again, I often say, if you made profits, you can lower your stops to protect profits. You can lower it to break even, entry, wherever you want. But this is swing trading. And if you get a trade like this where you can game those bounces, not all of them, maybe all of them, if it depends how active you are and what your skill sets are. But ultimately, I'm calling for, from the wedge break down to T4, a drop of 39%. It is not unusual for me to make 60% or so on a trade like this by reversing. And there's a nice level. T2 is probably as nicer than T1 as far as well-defined support, because you have both the bottom of that gap and was resistance before it and support over here, and you have that long-term uptrend line coming into play. All right, so that's it. So another profitable trade so far. Then the next one before that, official, we had, got to go to the next page. We're only going to we'll go back 2 pages. Lithium, that one was highlighted first in videos and then followed up with charts. And we hit that T3. We're above the downtrend line. So if it pops T3, T4, 5, 6, those are still the targets there. We do have, I'm going to point out right now, because this is also an update to these trades, we have negative divergence. Don't fall in love with this one like any stock. Oops, I just moved T2. Where did we have it? Right about there, I think. somewhere about there. Maybe that gap, I don't know. I'll fix it later. There's a potential uptrend line, but right now we're above the downtrend line. And if the market craps out, lithium stocks, they can dance to their own drumbeat because they have their own unique dynamics. A lot of the stocks in here aren't even U.S. companies anyway, so they may or may not, and they typically aren't indexed in the S&P 500. You got to know I always say, know your security rules, what I call it when you're trading, know the ins and outs. Some ETFs, some sectors that I trade have no correlation with the broad market. Because either they're not in the indexes, they're smaller companies, or maybe they're in a sector that tends to have little to no or even an inverse correlation with the S&P 500. So there's still profitable by a large margin there. Before that, I already covered wheat, UNH, United Healthcare, UN, I forgot to hit the H. That one we took somewhere off the lows. Where did we buy UNH? Second price target hit. We bought it right here, breaking out. Oh, I first highlighted as a setup. This one was in the news. I was watching it too. People were asking about it back then. Someone brought it to my attention, maybe bumped me there. So I highlighted a breakout above that downtrend line. So that's our official entry on the trade. When I threw that chart out to you there. And let's go back to the chart. So there was the breakout. We're up about 20% on that one. To the recent high at this moment, we're up about 19 and a half. Yeah, 20% still round off. And that's it. And you can see a great example here. On that one, we hit T1. We had a reaction. We stopped there one day. We stopped there 2 days. Those are reactions. That's a reaction is when you're going up and you hit a resistance level, you either pull back or you stop there. Hacky sack or ping pong ball, right? And then what we did, we gapped above T2. And so that officially gives you that target. If you had a sell limit order, to sell at T2, they would have filled you higher. That's where sell limit orders will fill at your price or better. That's what they say. They can never fill you worse. That's how a sell limit, what it's designed to do, and says, sell me at this price or better, just not worse. And so you would have filled on the gap up. And that's it. So it's a great example. T2 was resistance. It was taken out in one fell swoop on a gap. And what did you? Came and back tested it. And it's so resistance once broken becomes support. That's a basic premise in technical analysis. There's a big gap there. If it loses a gap, we're going to go back down to T1 most likely. However, we're above T2. So again, as long as the market can hold up, this is an index stock. This one's normally has a correlation with the broad market. So anyways, another profitable long trade there. And oops, I need to go back to page 2. And we're almost done here. I'm going to give you a few new ones. UNH. That's it. Page 2. Yeah, these are all just coverage. That's analysis on Lilly Novo. We hit T1. We hit the first target on Lilly and bounce. Yeah. All right. So we're caught up. Now, as I showed you, somebody asked me about Wayfair, asked if it's a short. Absolutely. This is Wayfair, clearly in a bear market, big retail company. Most of you, I'm sure, are familiar with Wayfair. That was a big divergent high. I marked it back there, and then we, just like the stock market, we broke down. We put in a marginal new but still divergent high. There's a great example and exactly what I think the stock market's going to do. So you can see I had marked that divergence back in 2020, and then it started going down, hit support, bounced, made a marginal new but still divergent high, held up just like the stock market. That was above the 200s, testing the 200s. Then it took out the 200s, resistance, rejected off the 200s. Then it took out that was key support. It danced on it, and that was it. Lights out from there. And from there, that was as a 10 on a scale 1 to 10 sell signal. And the stock fell 87%. And now it's come full circle, divergent low, but this is a bear trend. Great company. My wife and I order from Wayfair all the time, but that doesn't make it necessarily a good stock. I don't to have time or the inclination to read through the balance sheet and look at the fundamentals. I sometimes do dig into fundamentals on a company. This one's based on technical analysis. All I can tell you, look, there's a big sideways trading range down here, potential basing pattern. And if the stock market's going to new highs and beyond, I like Wayfair. I think it'll break out, and it's above the 200s right now. But near term, the question put to me, was it a short? Yeah, just broke down at this well-defined. Look at that uptrend line, very steep with divergence at the high, giving you a little wedge pattern right there. And there's a sell signal. Targets, well, they're marked. 1, 2, potentially 3 right there. So that gives you as much as another 48% downside if that final target's hit, and at least to my first target about 20% downside. Let's see what else I have for you. That's mostly it. I'm just going to go over 2 things since the market seemed to really hurrah the fact that Powell, they even though Powell said he acknowledged the difficulty. He's got the inflation risks on the upside and the weakening job market, but the stock market, as they often do, only heard what they want to hear, that, oh yeah, he's likely going to cut because finally he sees evidence the job market's rolling over. And again, that's the one thing you as a bull or a long-term investor doesn't want to wish for. There's a lot of things you can wish for in the stock market. I promise you the one thing you don't want to wish for is the job market to turn, because as I've showed you many times in the past, and I posted this very chart last week. Somebody asked me something about the job market. This is directly from Fred, the Federal Reserve. This is not me making this chart. The only thing I did, I added the red arrows. And I've covered this many times, and honest to goodness, it shocks me that this isn't talked about more, that the media, that they, and maybe there is somebody out there. I don't watch a lot of TV. I get most of my financial, news and information reading, and I'm not seeing this written as well. Is that the job market, as I said, first of all, has a low end of the range. Now that range was a little different. Obviously, we all know things were different back in the 50s. We can sit here and all day long talk about some of the differences in America, but in the 70s it was also different. Market conditions, market environment that was characterized by runaway inflation, one of the longest and most severe recessions and bear markets in many years. And so there was a different floor back then. It was a whole different dynamic. That was the runaway inflation, that the same situation happened. You even had, as I heard, I don't, was too young to remember. I was around at the time, but too young to remember. There was pressure then, not to the extent Trump's exerting on Powell, to keep easy rates. And it was until Volcker, and that was the previous Fed chairman before Volcker, and Volcker came in and busted up the, jacked rates up to break that runaway inflation that we had back in the 70s. And that's what they say Powell and the current Fed is afraid of, that we may have, they're afraid to declare mission accomplished. Remember George Bush with Iraq on the aircraft carrier declaring mission accomplished? And of course he had a lot of crow for that. And so those are the risks that we're balancing right now. But the takeaway that I've showed you here with these red arrows, there's no variance, no exceptions here. When the job market bottoms, unemployment bottoms, meaning you have a recession, the gray areas, unemployment surges, then you have a period of falling unemployment. But in virtually every instance, when it bottoms and when that turn is finally in, when it's not one of these tiny little squiggles, those are just little squiggles in the trend, when you can see a clear trend change with few, if any, exceptions, that's it. You don't stay flat. We have turned. Unemployment rate has been rising. And again, it's still at relative and low levels. It's at the low end of the range, so it's considered healthy in that aspect. But again, guys, this is what I do day in, day out, and I live, eat, and breathe. It's technical analysis and chart reading and pattern recognition, and that's where it all developed many moons ago, long before I was walking around. Folks started to figure that there's some patterns that tend to repeat in the financial markets, and then they started. That's where early technical analysis came from. Certain things you look for. So again, these are the troughs, and once it turns, the gray lines you can see, and the turn is always then followed by the recession. So the bottom, the turn, you start going up, and then unemployment sharply begins to accelerate. And I have, again, just the highest degree of confidence. This is what it's been for many decades now. Will this time be different? Absolutely, it's possible, but those are the four most dangerous words, right? Was it Sir John Templeton? I think some might have said that. Those are the four most dangerous words in the financial market. This time it's different. And that's it. So COVID was kind of and that's the whole thing. If anything, if it is going to be different this time, it's because COVID was just really an unprecedented situation where not only the U.S., but the entire global economy effectively was shut down for a period. And that kind of set things wonky. And we're still there's still a lot of distortion in a lot of technicals. However, again, you want to say it's different this time because of that, that's your prerogative. And again, the markets take a while to react, but there's the turn in unemployment. And if we did this and we had another, because the most of the bulls out there are looking for a positive year into 2025 and beyond, well into 2026 before any signs of a recession, that would just be atypical. That's all I can tell you. So again, the turn has been in, and now if we start to see some acceleration, I think the markets will be hypersensitive to these employment reports that are coming out. The other thing is the dollar. Talked about that quite a bit. The dollar bottomed here. That's long-term support, as I mentioned. We hit that, bounced up that first target there, and we pulled back as expected. And so far, we're walking up that minor uptrend line I gave you recently. And if the dollar does this and takes out that T1 level, right now it's just being dismissed as, okay, the dollar, is hanging in there. It's not falling anymore. Remember, this is bullish for gold, for the stock market, for silver, for crypto, especially gold and crypto based in dollar, because they're denominated in US dollars. Same thing for the stock market. If the dollar is cheaper, then it's going to take more dollars to buy a share of Apple. All right, so this is what to watch. And what I would point out to you is we now know a Fed rate cut is pretty much locked in, baked in the cake. As of Friday, when Powell got up on, and spoke at Jackson Hole, the rate shot up to 90%, I think it was. And only a couple weeks earlier, they were down to around 70, 75, if I remember right. So, what I'm noting here is the dollar isn't really reacting much on that. Yeah, sure, I have one day, but it's still well off those lows. So we'll keep that in mind. And that would be, again, if T1's taken out, that should be net bearish for gold, silver, crypto, GDX, and quite possibly the stock market. If you look at the trends, this is what's taken the market to new highs, this falling dollar there. And the other one I want to mention too, very much, is TYX. So back here, I commented on it at the time. This was the most aggressive rate cutting cycle in many years, other than, of course, since COVID. And it started with a bang, an unusual 50 basis point rate cut. Feds typically, historically, have reserved 50 basis point cuts for emergencies, sign of market distress, anything big. And so they started with a bang, followed up by at the next two consecutive meetings, additional 25 basis point rate cuts. And instead of what the market has normally seen, normally you'd see long-term rates fall, you saw them go the other way. And again, I talked on it at the time. I'm not the only one that noted it. I expected it. It was priced in the charts. We were long, we went short treasuries, which means yields went up in reverse. And so we saw 3 rate hikes. And at the end of the 3 rate hikes, long-term rates went from here to here. I can't call it unprecedented. It's unprecedented, at least in most of our lifetimes. And again, what that was is the Fed losing control of the bond market, bond vigilantes. What I want to point out here is this rate cut is now baked in the cake. Why are long-term rates still pushing within what I call spitting distance? 5%. If we go up any more than 5%, 5% is me measuring from where the yield, the 30-year is right now, to these 2 previous highs. And as I've covered with you many times recently, I go out to my monthly chart. If we pop that level, it's going to take rates all the way back to where they were in the early 2000s, even potentially back into the 90s. I'll just, yeah, if you're new to the site, I have to draw it. This is right here. That take a horizontal line, and right here, it would take rates. That was the early 2000s. This was the turn of the millennium right there. So, and if that happens, and that is still my preferred scenario, I'm not going to bet the farm on it, but it's what I think is most likely going to happen, and it meshes with my stock market outlook. And so if we break out, the 30-year breaks to multi-year, let me correct myself. If the 30-year breaks out to multi-decade highs, which it will be, it'll be, yes, multi-year, because it'll take out these two, but it's also going to take us to yields not seen since early 2000s. I can all but guarantee you the stock market is not going to like that. So it hasn't happened. Just like I made a let's see what Powell does kind of thing. I didn't, and I made very clear I wasn't making a prediction for Powell to shock the market and come out hawkish. I said it would be a gray swan, which by definition is very, very much against the odds and the expectations. I just said, hey, if he does come out hawkish, market won't like that. He didn't. He let the doves out, came out dovish, the market liked it. But the market's not really following through much on it so far today. And again, more so, guys, is this, that the 30-year bonds are stubbornly hanging up here within 5% off those multi-decade highs. And again, can't make a strong case to be long or short. This is one of the things I'm watching versus trading. It's been a dead money trade, kind of moving sideways, but we did put in a divergent high there, divergent high. This would be near-term bullet. This is TLT, guys. I just flipped over to the bond itself. These are TYX is the yield on the 30-year bond. TLT is the ETF that holds it. And so we put in these two highs there. Divergent highs went low. We put in divergent lows. We've had a lot of swing trades over last year in TLT. Right now, it's kind of not very clear to me which way it's going to go, although I favor this over at some point this year or next. And I think it'll happen this year. Based on where we're at, if it's going to happen, it needs to catch people off guard. And I think now would be a good time to do it, because I don't hear many talking about it. And you're going to need something like that to take the wind out of the sails of the stock market. But again, guys, it's more than, it's not as much a prediction as a thing to watch for. And so if you keep just one eye on a chart of the TLT as well as IEF. IEF is a 10-year bond. We're in my I gave you these zones way back when in early 2024, and I defined what they mean. This is the green zone, which is bullish if the stock market's up there because yields are low. You have an uptrend line right here. If taken out, that's going to take us down to the yellow zone, which I said the stock market would start to take note of rising yields. Orange zone, the stock market really starts to take note of rising yields. And without exception, I laid those zones out before we got there, that these were the biggest corrections that we've seen in the stock market. So this has been 100% accurate as a predictor. We haven't had a lot of signals. We haven't gotten the orange zone a lot. So watch for this. It's going to take the 10-year a bit to get down there. And I'm watching the 30-year as well. 10-year is the one that most talk about on in the financial media, because it is what the 30-year mortgage is pegged to more so than the 30-year bond, believe it or not. But again, I think the 30-year bond, just making that headline will rattle the markets. And 30-year bond will absolutely break down or break out, if it's going to new highs first before the 10-year. Remember, TNX is the yield of the 10-year. And so you can see TNX, long term it looks the same. You have this trading range here. You have that multi-year. Here, let me park that histogram. This purple line right here would be the breakout to new, and it would take the 10-year back to where it was. Just kissed that high back in 2006, but before that, yeah. So if you take that out, actually no, yeah, you'll take out this line here. I have it at, what's that at? 53.21. That's a 5.32 yield on the 10-year. Yeah, same thing. It's going to take you, has the potential to break you out to levels not seen since the very early 2000s, even the late 90s. And so, again, just something to watch for. Okie doke. With that being said, there it is. So, until and unless we have some of the longer term, some sell signals on the longer term charts of the indexes, that's SPY, QQQ, and the likes, key support levels, trend lines, 200-day moving averages. Again, it's I'm going to continue that long, short, as far as equities go, the most bullish longs. And again, the kind I like. It doesn't mean you're not going to make money on NVIDIA. Like I said, I wouldn't buy NVIDIA along with your money right now. I'm not short NVIDIA right now. I'm going to wait to see how earnings go. But as I told you, yeah, I factor that in. Going back to the comment in the beginning of the video, well, yeah, NVIDIA is going to report. Sure, but they're already on a sell signal. And I play the game every earnings season. I like to go in and pick stocks, and I'll tell you my 2 cents, whether I have an opinion or don't have an opinion. And if I have an opinion, as I often say, if I have a pretty good read on the chart, if it's clearly bearish, then that's the way it usually goes post earnings. This one is coming off a big divergent high, already broke down here. Again, pre-earnings, it's a pretty big gamble to take NVIDIA into earnings. But yeah, absolutely, it will most likely indicate the next direction the market goes. And again, not the day they report, not Wednesday afternoon or Wednesday evening, but how that stock trades going forward in the coming days, the coming weeks, will most likely determine which way the market's going to go. And you may not want to hear it, but any new high anytime soon will still be a divergent high. So I can tell you if it pops new highs, I'm not chasing it. It can go to the moon and back. It can do it without me. I'll sit there and trade the Pepsis and the Walmarts, or Novo Nordisk and all the dozen other long trades we've done lately. Most of those double-digit gainers, which are blowing away the market. Remember, the stock market gets a lot of cheer, but it's not going anywhere. It's the stock market right now, from where it's at year to date. Where's the beginning of the year? Let's do this for you and just kind of show you the stock market's doing. January was right here. There's the beginning of the year. The S&P 500, the market is up about 9% for the year. We swung down almost with impunity that entire move, caught the first half of it up, and so blowing away the performance of the S&P by just swing trading. And so again, I'll sit back, let the market show us, let NVIDIA show its hands, its hand on Wednesday afternoon. We'll see how we trade the rest of the week. SPY is still on the recent sell signal, broke down there, a little kickback rally, and that's it. Any new high anytime soon. Again, if it's just marginal, we'll still be very much a divergent high. I don't know if we equaled that high from last week or not. If so, it's still the same high. All right, guys, I'm going to wrap it up here, get it out to you. As always, if you want any chart updates on any particular charts I've shared, any you're looking at, a lot of the trade ideas like Wayfair today and some others I get from you guys when you ask my opinion on charts, and then I'll share them, pass them along to everybody else. So let me know if you want an update on anything. This has been Randy Finney with Right Side of the Chart. Have a great day.